was curious too, and others can ask other questions, but I was just wondering what percentages of your business, your banking business, involve real estate loans?
Percentage? I can give you the percentages because I look at that every day. There's two, we look at it in two different ways. I think Dennis and the folks at Coast Central look at it similar to how we look at it at Umpqua and Redwood Capital. There's commercial real estate and there's residential real estate. Predominantly, our loans are secured by commercial real estate. We do a few residential real estate loans, but for the most part, we will originate those loans. In other words, you'll come to the bank and you'll originate it, but we will sell them to Fannie Mae or Ginnie Mae or Freddie Mac, and we'll take a servicing fee in return for that. So we're not taking what we call the credit risk associated with residential mortgages and the spikes, the upturns and the downturns in the housing market. We're more comfortable to play in a commercial environment because from our perspective, it tends to be a bit more stable in terms of price and fluctuations.
And I think also the fact that you probably discussed this in your classes is that we have a real severe problem up here in that housing prices are up, and we talked about this earlier in one of the meetings we had. 91% of the people here in Humboldt County can't even afford to buy a house. And that was a big issue.
Even though they're starting to come in soft.
Exactly. But it's still at 91% of the people. So what we all try to do is figure out, okay, how can we help some of these families get into homes? However, in saying that, we also can't take just unlimited risk either.
Because it doesn't help them.
Exactly, right. So these are things that we're looking at is how can we, without undue risk, how can we help some of these families be able to buy a home here in Humboldt?
Understanding that, I was talking to my supervisor the other day. We were talking about like the different jobs that are available in Humboldt County. When I'm from LA, you can come straight out of high school and get paid.
They lost today, by the way, 65.
Really?
I know.
That's not another subject. So, like,
I'm sorry I lost you.
no, that's cool, that's cool. So, when the jobs are paying like $30,000, $40,000, $45,000 a year, and it's so hard to find a job that's paying over $60,000 a year, like, I don't understand how the market for real estate, you can charge somebody $300,000 for a house, but you're gonna be working for the rest of your life to pay that house off. Like, and you're right, like going to get a loan from the bank and stuff like that to pay for the house, it makes sense. But even then, like you still have to pay back the loan with interest. So, why is it like that? How does that work?
Well, that's why one of the things that we all do, we're from different institutions, but we all work together on various things. It's we're out in the community trying to
we do the first-time home buyer program, which is UCAN and Arcata both have that, and many banks participate, and it's geared for more lower income. But then you can only buy a house at a certain price range, and that's the other tough part is finding finding affordable housing, and that's the really tough thing here in Humboldt County right now.
And they're probably not at the $300,000 loan.
Right. No.
Yeah.
Just to follow up on Jermaine's question I wondered what percentage, how many people have adjustable rate mortgages and got them when they were really low, and now that the rates are high, that's putting people into really tight situations of potential default.
It is. You asked about percentages and whatnot. Our commercial real estate as a percentage of our total loans is about 57%. So the majority of our loans are commercial real estate secured. We do have a few loans that are residential secured, and the ones that we have that are adjustable rate, we're actually proactively calling them and saying, hey, you might want to think about fixing that out. So we're giving them options to refinance into a fixed rate product where it's a little bit more stable in terms of their monthly payment. Because we're not in the business of foreclosure, and I know these banks aren't either.
It's very tight.
It's
very costly.
Very costly.
How does that work with the fees? You have the fees service for the mortgages, but you've sold they bundled the mortgage itself. So if they're not making their payments, then that affects your revenue.
The ones that we have on the books, Dr. Yahara, yes, it does. But for the most part, Dan, for the most part, we we get them in the door and we sell them, they
Sell
never hit
them.
our books.
Yeah, they go
don't
right
hit our
off onto
books.
somebody else.
So we get a spread between the difference in what the customer pays to the end institution, whether it's Fannie Mae, Freddie Mac, or whomever, and what they actually pay us.
Are you doing the servicing?
No,
No,
we're not doing the
some of them retain the servicing, so you would still make your payment to Umpqua Bank, but we sold that loan, and
Right.
you were paying us and we pay the other lender, but we sell ours off also.
So I was only speaking to the loans that we actually had in our portfolio, not the ones that we originated and then sold out.
Andrew,